No doubts about it. It's been an interesting 24 hours as the markets lead up to the CPI announcements coming in less than 24 hours. The S&P has taken out the swing top and also some clean resistance levels. Bitcoin also up and breaking the $18,000 level halfway, nearly halfway back to regaining the losses of the FTX scandal only 2 months ago, and Ethereum breaking $1,400 as well, getting back into some green territory in terms of our weekly swing trends. So we have a lot to cover in today's video. I'm going to keep it nice and simple. This is looking at the forecast that I had put together just last week on the channel. So if you haven't already, do those good things and hit the like button and subscribe to the channel so you can stay up to date with the content and follow along. It is or can be a lot to take in at any one particular time, especially when there is so much going on in the market. So I'll leave a link to all of these videos at the end of this video. Make sure you stick around to check out that content so you can obviously stay up to date with the macro picture here. That's where you're at. You're at the home of macro cycles in the stock market, real estate, and of course, cryptocurrencies. So the main thing the market's waiting on is the CPI announcements. Now, this is coming out in around 12 hours time. You can see the forecast is 6.5%, and the core, they're looking for a difference of 0.3% here. So if these numbers are greatly above them, that's not going to be good for the market, but it seems like the market or the investors are front running the market, especially with such a significant increase on the S&P. We've also seen the Dow Jones increase as well in the last 24 hours, so that market is also up, and these are starting to climb back or getting closer again to their all-time highs. Yes, even in amongst all of the fears of a great deep recession for 2023. What we've been covering on the channel, as I said earlier, is the unlikely event of a deep, dark, heavy recession of 2023. If it is to occur, it's probably going to be very, very light. That's what the data is telling us. So be sure to stick around on the channel as we continue to cover this in the macro time frame, and of course, give our thoughts on cryptocurrencies. So that's where we're currently sitting and waiting for the CPI. The SP 500 is climbing towards the downtrend here. So this is the resistance level from the top, and this is throughout the bear market. You can see we've held up so far relatively nicely on our 50% levels. This is the GAN analysis that we use here on the channel and with our members at the Investor Accelerator. So you want some more information on that and learn how to read the charts, trade the markets, invest full time, I suggest going to at least click on this top link here. It's a free crypto and economic report that is coming out very, very soon. Click that, subscribe, email, and your name, absolutely free. So this is what we've been looking for, especially in this early stage of January. Looking, as I said in last week's video, a potential rise in January into February, and then a fallback into potentially late February, March, maybe even into April. So things are going to get a little darker again, but remember the important part from this point is to see where those lows are formed, the macro lows. And so far we've got a macro low in October as the major low here of the cycle, and then another low here in December. So we tend to go on these approximate 2-month or so moves. So we're looking at that low to low. Now we've obviously got some resistance coming up here at around 4,000 points. So we're gonna have to see what that data comes in overnight. It doesn't really matter long term. What it does do in the short term is the volatility for the markets and the traders. So overall, nothing has changed here for the S&P. I haven't changed any of my views here on the market. It has remained the same since we talked about it with the lows coming in June of 2022. This looks like a bottoming process, and I'll continue to say that until the charts say otherwise. That would be a significant breakdown underneath the October low and the major 50% level here, which is at 3,500 points. And as you can see, we're trending towards 4,000 right now. The breakout point is 4,200 points and consolidation above that level. So the US dollar is also part of this macro makeup. And in terms of where we currently sit, we only saw a very brief bounce from this low so far, but we have come back to test the support level once again, which is around this 102 to 103 level. As we can look back in history of the US dollar, that's where those tops were. So what does this mean for the market? Well, if we do get a bounce off support, it's probably going to be a little bit tough on the prices for Bitcoin, cryptocurrencies, commodities, and that could be very short-lived. I'm expecting any sort of rally from this point in the US dollar to be short-lived. As I said here, 1 to 4 weeks, because that's typically what the market has done in the past, especially in bear markets. And so that would then line up pretty well, giving some pullback to Bitcoin and cryptos after this significant move over the last couple of weeks. If this is to move up, then potentially we see that pullback in Bitcoin and cryptos in the short term. Okay, so that's where we sit on the US dollar. Things are still well and truly on track here, looking at that top being in, or basically a very significant top being in for the US dollar, and probably some more downside. We've talked about this and covered it very extensively on the channel as to the reasons why this is happening and where we expect it to go in the macro picture, that longer term picture over the next several years, regardless of the money printing, of what the Fed does, of what that next news item is, what that headline is. It is just there as noise. And I hope we have begun to show and prove that to you over the last 2+ years of being here on the channel and explaining that the news is just noise. If we haven't already and you're still interested, make sure you do hit that subscribe button. I always remind you throughout the video when you're finding some value from it, and of course, like the content up as well. Now, these are the other 2 videos that we're going to cover next, based on the forecasts for 2023, as we need to update that as well. So these videos were just out 9 days ago here on the channel. It's the forecast for the S&P and for Bitcoin. Now, I've also put up some unpopular opinions of mine in regards to the financial markets and how I would use these moving forward with my investing. I've said S&P 500 is bottoming, not crashing. I don't expect us to go much below 35, maybe 3,200 if we're to get this drop back in March and things start to get a little bit dire. Europe will not freeze this winter. I think we're basically through that, and Europe ended up having one of the warmest winters on record. Now, I said this earlier on as well. Real estate's not going to crash in 2023. We're basically rounding that bottom again. Second half of 2022, first half of 2023, buying opportunities. We're going to look at that as an update for Bitcoin next. Bitcoin is bottoming. I've been talking about that for so long. June was at 17.5K low, and what do you know? Bitcoin is at 18,001 or 200 right now. So this is above that June low, and this could potentially be that Wyckoff accumulation area where we break down from the lows here at 17.5 to 18K, test a lower trading range price, and then break back above. I've got a Wyckoff analysis video coming up for you guys as well. And the last thing here is most cryptos are terrible dollar cost average investments. I continue to stand by that. Most of them are going to be that, but there are going to be some fantastic opportunities. I don't know which ones those are yet. We're still waiting on some confirmation. These things take time, can take months, if not years. And I prefer to make my gains fast and quick and very easily when those bull markets come. Not looking to buy those exact lows. That's all going to depend on your particular plan. There's just too much risk in trying to find that next crypto, especially if they've already been through a cycle. So far, this is all remaining on track. This was what I put up in the video last week as well. This is essentially the move that we are working towards in 2023. A little bit of a move up here in January. This could be short-lived. This might be the peak out here on the 12th of January. But nonetheless, it is still that move up around that January, February period. And then I expect we start to move back into that March period where what we're experiencing right now, this FOMO in the market, especially trying to snag that next altcoin or Bitcoin, will probably wear off relatively soon. And we start to trend back. The $10,000 Bitcoin folks start to come back out in full force. The guys who talk about this won't age well in comment section, they'll come out in full force, and you'll start to see a repeat of that cycle yet again. But we have started to break up pretty well here, 18.1. I'd love to see it close and consolidate above that 18.5K. That would really start to put a lot of pressure on the guys waiting for 10K and below. And in terms of the market sentiment, which is one of the most important factors that we've covered a lot here on the channel, on the S&P and of course cryptocurrencies, is we've seen this start to climb as well. So today we closed at 30 on the crypto fear and greed index. Obviously, the lower it is, the more fearful the market is, and the higher it is, the more greedy everyone is. And what we've been following is the downtrend of the market sentiment, and eventually we're going to get this breakout, and the breakout point, we'd want to see it at around 40 and consolidate at those levels and start to climb higher. This is what we saw in 2019 when the market went on a pretty stellar run from about 3,200 on Bitcoin up to $13,900 on Bitcoin. So it was an absolutely massive run. I'm not expecting that we see another 340% run, but we could see a very significant run from 15.5, maybe come up and test somewhere around those low 30s to throw a number out there. Of course, we've got plenty of major resistance levels to get through first. We've got the 21.5, we've got the 25.5, and a few other Wyckoff flip levels there. One I remember was 26,900 as well. So this is all going to take time, and I don't expect it to happen in one straight line. I think we're going to test some levels and then potentially retreat as well. So stay tuned to the market. This is potentially the pattern that I see forming for Bitcoin and the S&P as we go throughout 2023. The energy is probably going to be short-lived, and the FOMO is going to take full effect towards the peaks like we're seeing at the moment, and then you potentially see the market roll back over and all those FOMO guys get absolutely screwed again. So the notes I've got here for the market sentiment will turn down again in 2023. You could argue that it's down now. Everyone's really, really fearful. What I'm talking about is this particular area here. Just these last few days on Bitcoin have been pretty solid. You would have to agree that going from 17,000 to 18,000, a nice $1,000 run in a few days, especially with such a vertical move up, really does get the masses excited again, jumping back into the market, trying to buy before they feel like they're going to miss out and missed out on a 15K bottom. That is typical of this pattern here where the market starts to run up faster and faster. You can see the angle of that move just heading straight up like a hockey stick. That's usually the end of the move. So you can see these big pumps, another big pump here in December, and that tends to be the end of the moves. That happens quite often, especially when the market is illiquid like it is at the moment. Now, two other notes that I've got about the market, something to keep in mind, especially if you're looking to invest during this first half of the year. The FOMO is going to feel more intense during these rallies. That's been my experience, especially as we come out of this low. It feels like more people are getting back in, and the FOMO feel out there is getting more intense. We've got FOMOs in the past, but we haven't had that FOMO feeling like we had in 2021 when the bull market was in full swing. We did have FOMO in 2022 with these pump ups, but they were nothing like those previous bull market FOMO feels. And this particular FOMO feel, although it is not objective whatsoever, it's more of a subjective thing here. It's just to get an idea and a feel that things might start to feel more intense, yet I still think we're going through a bottoming process because the charts, going back to the objectivity here, are not saying that we are out of this just yet. We don't have that major confirmation that we are ready to go on another big bull market. So just pay particular attention to those feelings and that FOMO that's happening probably over this first half of the year, as I pointed out in my tweets on Twitter, which of course is another shout out to go and check out those links in the video description for Twitter and Instagram, where I do Q&As for you guys over there. Last thing here is buy the dip might be more favorable now than in 2022. And of course, that's pretty straightforward, because if you expect that this to be the bottom, then any sort of moves that we see up and to the downside, those are probably or possibly going to be better buy the dip opportunities if you have a longer term view of, say, another 12, 24, 36 months away. They're going to be much better buy the dip opportunities than we had throughout 2022. Pretty straightforward on that call there. Now, for a proxy on cryptocurrencies, Ethereum is doing relatively well as well. You can see the weekly trend is up. We've broken past that swing top, and we're starting to head up sort of vertically for a weekly bar, especially with such low volatility in terms of Ethereum here. But at least this is some good news that Ethereum so far has been putting in higher lows. A lot of people, including myself, had expected Ethereum could potentially come back and test this lower price here, or the low that came in June, which is around $880. That still is possible. We haven't broken the bear market downtrend on the log scale yet. We haven't got past the monthly swing tops here at around $17 and $2,000. So there's still a little bit of resistance, or a significant amount of resistance to the upside for ETH. So I'm not going to get too ahead of myself here, but at least the short-term goodness for ETH is that it is holding above some macro swing lows, those lows being at 880 and the following one at 1080. So this is short-term good news for Ethereum. So the warning here is to wait and see whether we get some consolidation above the main levels of ETH around 1450, and then again above those two major swing tops. If Bitcoin does happen to turn down and the S&P starts to turn down, the dollar index starts to rise and put pressure on the commodities, and of course these risk assets will also be hit, then maybe we start to see Ethereum roll over. They are going to be the two key areas, 1080, watch that level, and then also watch 880 as well. These levels start to break, then we're probably going to test this particular zone right here, and that could lead to some much cheaper ETH prices. Hopefully we can get something between sort of $700 and $900 on ETH. Long way off, maybe it doesn't happen, but they're the key areas to watch here for Ethereum, especially as we get that FOMO starting to creep into the market and the bottoming process continue on with Bitcoin and the S&P. Guys, make sure you do subscribe to the channel, like the video up. Videos are popping up on your left-hand side for this particular playlist here of the macro look at the markets. Also, the link at the top of the video description, economic report coming out. And of course, if you are a trader, check out Bybit, BitGet, huge sign-up bonuses over there. I'll see you guys at the next video. Until then, peace out.